everyone, how are you all? I'm sure you're doing great, just as I am doing great when I am with you all. I am Sia Anshu Budhia and I am going to be taking your tax lessons. So you can say I'm your guide, mentor, friend, anything that you can call me. But one thing is for sure, we are going to work together as a team to ensure that you are not just excelling in your tax to get very good marks, but also you are targeting a rank. And more than that, once we complete with the syllabus, you are completely crystal clear with the taxes of UK that is covered in your syllabus, so that when you advance to advanced taxes in the professional level, you are having your base 100% clear. Comes the first question. What do we think the taxes play a role in, apart from the fact that nobody likes to pay taxes to the government, and taxes does not only mean that you are just shelling out your income and paying to the government. Taxes mean that you go beyond it. Taxes would mean that, look, I don't like to pay taxes, but then this is the money that is going to help my government to uplift a particular section of the society, to give us the basic needs that we need, that is building the hospitals, constructing the roads, and doing all the other welfare activities that typically the citizens of a country need. So taxes are collected from that perspective. Generally, we have progressive taxation, that is, as you earn more income, you are going to pay more taxes. If you have lower income, you will have lower taxes. So that not everybody is burdened with the same level of taxes. So taxes are not at all bad, my friend. Taxes is something that is going to help your economy to uplift itself, to grow. Okay, now tax as a career option is also very, I'd say it's a very lucrative career option, and it's very it's always in demand. So whether you talk about overseas taxation, you talk about doing the return filing work for the individuals, for the corporations, tax planning, even when we talk about mergers and acquisitions, it has got a major tax element. Okay, transfer pricing, and various other areas where there is frequent demand for taxes. I typically find taxes to be a very interesting area, and an area that we must have hold on. So let's deep dive into these UK taxes and explore these UK taxes and get a hold of it. Whenever we understand any tax structure of an entity, we must know its the flow. That is, whether it comes to individuals or it comes to corporations. What are the different taxes that are covered here? What are the different types of taxes? So let's understand that in detail. First, I would like to take up what are the different types of taxes. There are typically two broad categories of taxes. One is a direct tax, another is indirect tax. Of course, comes the basic difference. Ma'am, what is the difference between direct tax and indirect tax? So I would like to give you an example. You have a friend who says that, boss, I want money from you. So you have earned your income, you take out that money and you give it to your friend. Case 1. Friend came directly to you, you took out the money, that is your money, your income, and from that income you gave money to your friend. Okay, this is case 1. Case number 2, your friend said, boss, I want money, but now you don't have money. So you called your other friend and you said, boss, I want money from you. Now that other friend gave you money, then you gave it to the friend. So here also you are giving it, but you're not giving out of your income. You're collecting it from somebody and then giving it to your friend. This is case 2. So which according to you is direct tax or is it direct collection? Yes, you are correct. Case A. Why? Because here two entities, they played the role directly with each other. Or if it comes to taxes, direct tax simply means whose tax is it? My tax. Who is paying it? I am paying it. From whose income it is getting deducted? My income. So everything is me. Tick, 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 direct tax. Because this is a tax which is directly levied on the income of the individual and it is borne by the individual directly. No one else involved in it. Like income tax, okay, like you can call all the taxes as in that we are going to study IHT, that is inheritance tax. Don't worry, we will cover it. NIC, national insurance contributions, all of these are direct taxes because they are borne by the individual directly and paid by the individual himself also. Can be by himself or can be by somebody on his behalf, like TDS. TDS we call in India, in UK we call it as pay as you earn. Okay, we are going to cover all this in detail, don't worry. So when I say pay, now let's say I'm an employee, I am earning salary, my employer deducts pay and then give me the remaining salary. For example, let's say my salary is 100, my employer deducted pay of 20. So how much my employer is going to give me? Cash of 80. This 20 will go to the government. And which government? Income tax of UK. And this income tax of UK, we call it as HMRC. I'm going to cover this. Okay. So now what happened? It is employee's salary. Whose tax is it? Employees. From whose income it is getting deducted? Employee. Even though it is paid by employer, but employer is not paying from his own pocket. Employer is deducting from the salary of employee only. Got it? And now then it is being deposited to HMRC. So it is a direct tax. Whose income? Employee. Whose tax? Employee. Who is bearing it? Employee. All these tick, it is a direct tax. Clear? Let's go to the next one. Now I say there is Mr. A. Mr. A sold goods to Mr. B. Now let's say you go to the market and you are buying goods from somebody. Now when he gives you the bill, like for example when you go and buy your grocery also, even when you order Swiggy, you get a bill, right? And at that bill there is tax also involved and you pay the taxes. So you are paying taxes to Swiggy and Swiggy will then deposit it to government. But is the government deducting tax on Swiggy's income? No. Swiggy is just collecting tax and giving it to the government and say that boss, this tax does not belong to me. So I will not keep this tax money in my pocket. And he is just like a collector who's collecting tax and depositing it to the government. Okay, like in this example, Mr. A sold goods to B. Now B will pay to Mr. A, let's say 100 is the main amount. On this there is a tax of 20. So he will pay 120 to Mr. A. But what will go to Mr. A's pocket? Mr. A will only keep 100. Very good. And what about this 20? Now this 20 will go to HMRC. So what is, if we do the tick marks, it's whose income? It's actually the income of Mr. A when we say the selling and the profits. But who is actually bearing it? Mr. B, not Mr. A. So Mr. A is just collecting this amount from Mr. B and then depositing it to HMRC. So is this a direct tax? No, it is an indirect tax. And what is the best example of indirect tax? In India we have GST, in UK we have VAT. So the best example and the only example that I would be giving you for indirect tax is VAT, value added tax. We have a chapter dedicated for it that we are going to cover in detail. Got it? So now I am sure you guys are absolutely crystal clear for what are the direct taxes and what are the indirect taxes. Don't forget this definition and understanding. You have the taxes deducted on the income. Yes, for both direct and indirect tax on their own income. Number 2, are they bearing it themselves? In case A, yes. In case B, no. So when it is no, it is an indirect tax. When it is yes, it is a direct tax. The purpose is that direct taxes are like income tax, NIC, IHT, capital gain tax, and indirect tax is VAT. All of this we're going to study in detail. So let me just summarize this, guys, just for all of you again. Direct tax is the tax on income, chargeable gains and wealth. Tax are collected directly from the taxpayer. Like the friend example that also I gave you, example number 1. Indirect tax is the tax charged on goods and services, and tax is paid by the buyer and is collected and deposited to HMRC by the seller or the service provider. So we call it as indirect tax like VAT. Clear? Crystal clear? Fantastic. Now comes the thing, ma'am, who is HMRC? You know that in UK we have a monarchy system, like king queen system. You have the queen, now the queen is no longer there, so we have king, right? Prince Wales, I think he's the king. Prince Charles, sorry, my bad. Prince Charles is the king. So they have always had this monarchy system, and due to which their income tax department and the other government departments also have majesty or queen attached to it. So here IT department is the revenue department. So here the full form of HMRC is Her Majesty Revenue and Customs. That means this department is also got the linkage to the Queen. So we say Her Majesty Revenue and Customs. Clear? You don't need to go very much detailed into the administration of HMRC. Just few more pointers are there that I'm going to cover. Now let's go to the next topic. So the next topic is another categorization that we can do for the taxes is revenue tax and capital tax. As the word says, revenue tax is the taxes which is collected or levied on the income of the taxpayer, like your income tax, for example. Capital tax is the tax which is not directly levied on the income but on the capital or the wealth of the taxpayer. Which are those taxes? IHT, inheritance tax, because inheritance is on wealth, right? You inherit wealth. You inherit that haunted house of your uncle, correct? That is your wealth. So you have IHT, you have the capital gain tax when we transfer a capital asset, which is your wealth, which is your capital. So when you transfer it, you incur CGT. So that is a capital gain tax. Comes the point, ma'am, why are we discussing it? Because when you have those 2 marks MCQs, these are some small crisp topics which are there. So let's be very clear about it so that any question that is coming here, we are able to answer it. Okay, now I'll take up this pointer, which was a summary. So typically in your UK tax syllabus, you will find 3 categories. Though I will divide the syllabus in 5 blocks, but typical 3 categories are there for taxes. One is the individuals. Individuals will cover the sole proprietors, will cover the partners, will cover all the other like employees, directors. Every individual will be covered here for their taxes. Okay, so first category is individual. And on individuals, which kind of taxes are levied? Income tax, payee, NIC, IHT, CGT, all these taxes are levied, including VAT also. Okay, next category is corporations. Corporations is companies that we call in a very simple language, and they pay typically 2 kinds of taxes only. One is corporation tax. So on every income, capitals, gains that they are having, on all these they will simply pay one tax only, which is corporation tax. Life is simple here. And on the goods transfers, they have VAT incurred. So VAT is incurred for both individuals as well as corporations. Clear? Comes the point, ma'am. IHT, boss, we inherit wealth. Individuals inherit wealth, not corporations. Okay, so here you don't have any corporations inheritance. Only inheritance tax will be borne by individuals. Okay, we will go in the deep dive detail of all these topics. Clear? So what we have covered so far, we have covered the categorizations as to what is the direct and indirect tax. Number 2, what is the capital and revenue tax. Number 3, what taxes would be applicable to individuals, what taxes would be applicable to corporations. So that we have clarity. Now comes the next point. Ma'am, what is a tax year? In India, we typically have the tax year is 1st April to the next year 31st March. So let's say if my tax year is 24-25, we here have 1st April 24 to 31st March 25. But is the same tax year rule for UK? No. Now you will find it very different but very interesting. So UK tax year runs from 6th April. Okay, so UK tax year runs from 6th April as the starting date of the first year, and it ends on 5th April of the second year. So now the question is, ma'am, that means in every calculation we need to do it for 6 days here and 5 days there? No. For that I will just come to it later. But now let's just take some examples. First example, let's say if I say my tax year is 24-25, so my year will start from, tax year will start from 6th April 24 and it will end on 5th April 25. Let's say my tax year is 23-24, now starting is 23, so it will start on 6th April 23 and it will end on 5th April 24. Let's take some examples. So guys, type in your answers. If my tax year is 22-23, if my tax year is 25-26, then what is the expanded form? Give me the answers in the chat box quickly. It's a 30 seconds question. For every question, I'll give you a timer. Because in exam, we have to look at the time. Okay, so 30 seconds I have on reverts. All of you type it in the chat box quickly. Yes, yes, yes. Very good. Very good. Absolutely correct. Absolutely correctly given by all of you. Very good. Yes. Yes, it is 6th April 22 to 5th April 23. Wonderful. So I will write it down here. 6th April 23, sorry, 22 to 5th April 23. And this one will be 6th April 25 to 5th April 26. Now comes the point, ma'am, do we need to calculate it for like 6 days and 5 days that we were discussing? No. For ease of calculations, only calculation purposes, because we always calculate taxes for the months or the year as a whole. We don't calculate in days. Okay, so for ease of calculation purposes only, I'm writing it again. For calculation purposes only. Okay, for calculation purposes only, we will take the period as, when you will calculate your income, you will calculate it for the period 1st April to 31st March. That is in round months. Okay, in round months. But remember, whenever you're writing your tax year, you will never write 1st April to 31st March. You will always write this language only, 6th April to 5th of April. Clear? Absolutely crystal clear? I'm sure you are. Okay, so wonderful. All of you must be absolutely crystal clear with this. Okay, so now next move on to the next topic. So I will take up some other crisp topics also. Now this is your summary file, guys. These are the notes that are going to be provided to you as well. These are the class notes or the board notes available for you. Okay, and right now I have not taken book also, because how is our approach going to be in the class? First, with these notes, I'll make the entire chapter absolutely crystal clear to you. Then we go into the book and we look at the portions and see, in case if you have missed out something, then we'll cover it up. Generally, it is not missed. And then we do questions so that we are absolutely firm with the topic. Okay. Now, the next thing I'm doing is, what happens? See, what is the procedure? Let's say, you file your return and you have paid taxes and everything is correct. So generally what we wait for is refunds, right? We all love to receive refunds. But then HMRC issued notice and said, boss, you have done wrong calculations and you've included the income less and it should be more. So they give you demand and they say that, look, you have to pay me more 30,000 to HMRC. Okay, more 30,000. And you say that, no, boss, it's wrong. Okay, we don't have to pay that. So now you are not accepting this order of HMRC and you want to appeal against it. So what you do, you want to file an appeal. So what are the steps that you are going to follow? Okay, step 1. Generally, the most preferable step is who will go into the tribunals and the court and make it long pending. So instead, HMRC has given you a very good option. HMRC says you can go for a peer review. That means in the HMRC, there is one officer who gave you this demand. You go to the department and you request that let another officer review all this order that he has passed and let him come up with his, his order. It may happen that the other officer may say, okay, I am cancelling this order and you are correct and we go by you. Or he may say that, I'm going by this order only, this order is correct. Or even in worst cases, he may just increase the demand, the demand price, the demand value also. But then first step generally preferred is to go for a statutory review or peer review, you can say that, in which you will request HMRC and you will have this order reviewed by another officer from HMRC generally, so that you have impartial decision, and generally this officer is not linked with the prior officer. Okay, this is so that if the things get settled here only, you don't need to go to the tribunals and the court and make it long pending. It gets settled there only. So this is the first step that we follow always in the appeal, especially when you're writing your questions. Statutory review. Okay, now if tax involved is a direct tax, now there are few criteria here. If your tax involved is a direct tax, generally taxpayer would make appeals to HMRC only. Firstly, if the tax involved is indirect tax, then the taxpayer is expected to make their appeals to tribunals directly. That means then they would not go for statutory review. Why? Because their VAT is involved, right? And the collection is involved. So it's when there are more than one party involved, so tribunals is the better place to go to. However, you can go for statutory review. HMRC is not stopping it. But especially when you're writing your exam questions and when you have to write the steps that are given by HMRC, it is preferred that for a direct tax, the first step should be to HMRC. For an indirect tax, the first step is to the tribunals. Okay? HMRC, when I say statutory review. Now let's go to tribunals. Tribunals are like the tax courts that we simply call as tribunals, not the regular civil courts, the tax courts. So there are two tribunals, lower level tribunals and upper level tribunals, or we call it as lower tier tribunals or the upper tier tribunals. So comes the question, ma'am, what is the sequence of going? Yes, generally it is, you will first go to lower tier tribunals. If the things doesn't get resolved here, then you go to upper tier tribunal. If it still doesn't get resolved there, then you go to High Court and then Supreme Court. Fine. But when the matter involved is of like huge value or it's of really very complex matter that lower tier tribunal cannot handle. For example, we had that Vodafone Idea merger, right? So which was a very huge case involving a very large amount of taxes. So then it would not follow the regular chain of statutory review and lower tier. It will go directly to upper tier only because it's a huge taxes involved there and it's very complex. So then you would go directly to upper tier tribunal. Okay, and only then it doesn't get resolved, then you go to High Court and Supreme Court. Got it? So this is the sequence that we follow. Now comes one more point. Ma'am, what about these? I mean, are the tax laws a compulsory applicability on the taxpayers of the country? Yes. Once a judgment is passed by Supreme Court, or it is a judgment which is passed by the parliament. Let's say the parliament finalizes the Finance Act, right? In our country also parliament finalizes the Finance Act. So when both houses of the parliament finalizes the Finance Act, then it becomes a you can say a mandatory point to be covered. So mandatory, then it becomes for all the taxpayers of the country to follow the same, which has become a statute now. Statute means it's a rule, it's a law. Now you have to follow it. Clear? So I hope I'm clear. Let me just cover what we have covered so far. Apart from the type of taxes that we covered, we simply covered what is a tax year for the UK taxes, and we also covered about appeals. That what is the sequence of appealing, like statutory review, lower tier tribunal, upper tier tribunal, what is the sequence? And when would the cases go directly to upper tier tribunal? So those cases also we covered. Any questions till this point? You're free to ask. Put your queries in the chat box. Look at it, think over it, and ask me your questions. After just one more topic, we are going to go to the questions and we're going to solve a lot of questions. That's great. That's great. Yes. Yes, absolutely. I need 100% clarity. Very good. So, yes, it is 100% clear. Great. Okay, and we will see this when we do questions. So that time I'll see how much it is clear or not. Okay, now let's proceed to the next one. So the next topic that I'm going to cover here is a very important topic. Why I say important? Because it is frequently asked. In every exam paper, I have found questions always to be asked from this topic or this topic. Okay, at least for 2 marks, it is always there. So why to lose even 2 marks, right? Because the ones at 48 knows the importance of 2 marks, right? So let's not lose even a single mark. Now the next topic that I'm taking is very interesting. For that, let me give you one example. So there is one client who comes to me and I'm an ACCA tax practitioner. Okay. And he comes to me and says, ma'am, this year the tax is going very heavy. So you please suggest me a way how to reduce tax. Because why would somebody come to you? Clients generally come to us by saying, by thinking that they don't have to pay taxes and every time they will get refund. So with that mentality only, that client came to me and said, ma'am, I want to reduce my liability and I really want refunds or a very, very low tax. Please help me do it. So I suggest him 2 ways. Okay. What are the ways that I suggest? So I suggest him way 1. The first one that I give suggestion is, I suggest that look, nobody really looks into the return. HMRC doesn't have a time in the whole world to look into your return. So the rental income that you have shown as 1 lakh, okay, just you do one thing, reduce it by 40,000 and show only 60,000 as rental income. Okay, just show 60,000 as rental income and just tier those rental invoices that you have and just show 60,000. Nobody is going to look into your return and match it with the tenant. No, nobody has the time in the world. So you just show 60,000 as rental income only. Second is, I suggest my client that look, the rental income that you are showing at 1 lakh, you can get the reductions for the replacements that you have done for the furniture. What is it? I'll explain you in the topic. So I say that simply you will get deduction for some expenses. I do R&D and I search these expenses and I say you will get deduction of the expenses for let's say 20,000. And I say no, you just show 80,000 as your income. Okay. So here I suggested 60,000 and I said 40,000 income. Don't show only. Don't show. Nobody's going to see this in your return. Avoid it. Don't show. Okay. And in the second one, I say that look, please go for deduction of these expenses. They are allowed as per HMRC. When you study that income from property business income, you will study that these expenses are allowed. So based on which I say you show your income as 80,000. Both suggestions are given by me as an ACCA tax practitioner. Now my question to all of you is, if you are a practitioner yourself, right? And in the layman language also, which approach do you prefer? As a suggestion, should I go with approach 1 or approach 2? Which is the best suggestion that I should offer to my client? Think and tell me quickly in the chat box. Ah, yes. Yeah. Very quick to answer all of you. So unanimously you are all telling me, ma'am, the best approach is going with option B and not with option A. Why? Why do you think option A is wrong? Even though option A is giving me such a low income, why I should not go with this? Yes, very good. Because here you are trying to reduce your tax liability illegally. And here I'm trying to reduce my tax liability legally. Because I'm following the provisions here. I'm following the rules of income tax. And by that I'm trying to reduce my tax liability. And here I am not following any of the tax and laws. And I'm just trying to reduce my tax liability illegally. This is known as tax evasion, because here you're trying to evade tax. You're trying to pay lower tax by hiding your income, by showing less income or more expenses. But all of this is not as per the rules and the provisions given by HMRC. These are illegal ways to reduce it. Like I showed you here where I tried to hide income. Second way, it is known as tax avoidance through tax planning. So here I'm trying to avoid tax. I'm trying to reduce my tax liability by doing proper and thorough planning for the taxes. This is something that is recommended and that is to be followed as per HMRC also. HMRC supports me for this, because we have rules that tell us that these are the ways that you can reduce your tax liability if you are, meeting with these criteria. Got it? So tax avoidance and tax planning is something that we recommend to the clients. We will never recommend tax evasion because that is not allowed. So it is your ethical responsibility also as per the ACCA Code of Ethics to ensure that you give advice to the clients towards tax avoidance and tax planning along with tax planning, but never for tax evasion. So if I just summarize it for all of you guys, but you are 100% correct. Tax planning and avoidance is the way to reduce the tax liability for the taxpayer by means of legal ways in accordance with the tax legislation. However, tax evasion is the illegal way to reduce tax liability of the taxpayer by misleading the HMRC with false information or suppressing the information. Like we suppressed, we did not show the full income. So that is false information that we used. I hope you are absolutely crystal clear. And any question that can come to you, you would be able to identify it's a tax avoidance or tax evasion. Any questions? Put it in the chat box. Very good, very good. Simple and clear. Okay, let's move on to the next one. So in relation to tax evasion comes your responsibility as the tax accountant, as somebody who is responsible practicing accountant, right? Because you are ACCA, so you will be carrying the burden of ethical responsibilities also. See, here comes that part, and that we have to sincerely follow. And can you see? I've given you steps. Step A, B, C, D, E. Okay, step A, B, C, D. And these steps are to be followed in the same sequence because this is a hot favorite topic for your exam. So let me explain you these steps and then let's go to the questions and solve them. Now to understand the steps, let's take an example. So again, I'm just repeating the background. So this is about when there is a tax evasion by a client. Okay, now it has been proved that the tax has been evaded by the client. Then ideally, as an ACCA accountant, as an ACCA tax practitioner, what is your duty as per the ACCA code of ethics? Let's understand that. So we have a series of steps that we follow, and these are the steps to be followed in the same sequence. Okay, remember that, because in your exam, sometimes you're tested for step 2, step 3. So if you remember the sequence, it's very easy for you to solve that question. For that, I'll just give you one example. Let's say that we know that ABC, Mr. A has evaded tax. Now, you being the tax accountant, what is your duty? Just think. What is your duty? Your duty will be step 1, that you will explain the client that look, there is tax evasion. Okay, and you would try to convince the client, you would try to persuade the client that look, there is tax evasion and please do the corrections, don't evade tax. Show the full income that you're hiding. So any expense that you have shown more, just reduce it to the actuals and show the accurate data and the full correct information in the return. If there is a need, we can revise the return. So try to persuade the client, try to convince the client for the same as a duty by you as a tax practitioner. Got it? That is, you would work in the best interest. So first step is you're trying to persuade the client or convince the client. Now client doesn't get convinced. Client says, no boss, I will not do anything like what you are saying, and I'm still going to continue to show the income that I have reduced and by which I'm going to evade the tax. I'm going to continue to do that. Now ideally what you should do, you try to persuade him, you try to convince him. Now what you should do. So I know some of you or many of us can think that yes, yes, absolutely. That's what I was saying. That many of us can think that we will inform HMRC that look, this client is persuading, this client is evading the tax, this client is showing lower income, so you please take strict action against it. But then you cannot do that, because when we study the ethics, there is one ethic that says confidentiality, that says it's your duty as a tax practitioner to keep your client's data confidential and do not share it with anybody, even with HMRC. So because you are bound by the principle of confidentiality, now you cannot reveal that to HMRC. So then what you should do in your best interest? Of course, what you should do is, now you will say, client, bye-bye data, I can't work for you. That means I'm resigning from this work. Okay, if the client is continuing to undertake the activity which is evading tax and which is not as per the actions that we suggested above, to ensure that the income is not hidden and all. So if the client continues to do that, then in the best interest, being an ACCA, it's your duty that you would say, boss, I'm resigning from my task. I'm no longer going to continue to work for this client. So step 1, persuade the client to ensure that the full income is disclosed in the return. Number 2, if the client does not agree with the with the reasonings and does not agree to follow what is suggested by the ACCA, then it is the duty of the tax practitioner to stop working for the client and resign from those assignment. Step 3, now the professional will inform HMRC, and what he's going to inform, that I've stopped working for the client without, very important, without giving the reasons for the same. He would not specify to HMRC why he's stopping to work for the client. This is a very important MCQ question where you're giving in the list of options that the ACCA would stop working for the client and will inform HMRC for the reason for the same. So remember that the ACCA is bound by the principle of confidentiality. Very good. So he cannot inform HMRC, although he is not going to continue to work for the client as a tax practitioner. So that information will be given to HMRC. And step 4, because this evasion part has to be informed by some way, right? So we do that in step 4. In step 4, in that form, the firm of the accountants of which that ACCA is a member, he would submit a report of this tax evasion to the money laundering officer of that entity, of that firm. okay, to the money laundering officer of the firm. Generally, as per the UK rules, every firm should have a money laundering officer wherein those reports can be submitted. So if the firm has a money laundering officer, then that report will be submitted to the money laundering officer. But let's say if the tax practitioner is a sole proprietor, that means he is just a single person in that firm and he doesn't have a money laundering officer. So then he would prepare a report and submit it to the crime investigation authority of that entity, of that country. So every country has the CIA, crime investigation authority. He would make the report and submit the report to that, directly to that organization. Okay, we will have a recap of the steps, but let's go to the fourth step. The fourth and the final step basically says that, not exactly a step 4, but it's a continuation of this step only, step 4 only, not a fifth step, that nobody should be made aware of this report that he is submitting. And if the client becomes aware that, he's submitting this the report to the money laundering officer or to the crime investigation authority of the country, then this will be termed as tipping off, and it's a criminal offense. So for the ACCA tax practitioner also, it will be a criminal offense and he will face criminal charges. Okay, so the tipping off should also not take place with the client or with any third. Let's have a recap of these steps. Step 1, take steps to persuade the client to correct the material error. Why material? It's an important error, of course. Okay, and disclose full information of the income in the return to HMRC. Step 1, persuasion. Remember it like that. Step 2, if the client does not undertake the advice of the professional as suggested in step 1, then the ACCA should refrain from acting for the client and should resign. So step 2 is resignation and should stop working for the client. Step 3, the professional should inform HMRC about his resignation or about his cessation of the duties with the client. However, very important, he should not give reason. So without disclosing the reason for the same to HMRC. A money laundering report, step 4, should compulsory be made by the professional and submitted to his firm's money laundering officer, okay, of the accounting firm. If he discloses about the money, if the professional is a sole practitioner, then this report can be submitted directly to the crime investigation authority of the country. Otherwise, the money laundering officer, he combines all the reports and submit it to the crime investigation authority of the country. If it discloses about the money laundering report to the client or to any third party, like I told you, it will be termed as tipping off, and this is a criminal offense. So remember the 4 steps, okay? And their steps in the same sequence are to be remembered. Let's have a quick recap. So what is step 1? Type it. Very good. Step 1 is persuasion. Step 2, perfect. Very good. Ceasing to work for the client. Step 3, very good. Information to HMRC without giving the reasons for the same. Wonderful. Step 4, very good. Preparing a report and submitting it to the money laundering officer of the end of the firm or submitting it to the crime investigation authority in case of a sole practitioner. Lastly, very good. No tipping off, otherwise it's a criminal offense. Wonderful. Done. So let's do some questions so that we have clarity. Let's do questions from the book. First question. All of you, 2 minutes. I'm going to read the question and you have to solve the question in exact 2 minutes. Maximum. The following acts have been committed in the course of business of one of your clients. Action 1. A customer invoice was omitted from accounting records in order to push it into the taxable profits of the tax year, of the following tax year. That means a customer invoice was omitted, removed from the accounting records in order to push it into the taxable profits of the next tax year, following tax year. Number 2, the client decided to gift an asset to the spouse. Why? Because spouse transfers, they do not carry any tax. They are exempt. They are at no gain, not exempt. They are at no gain, no loss. That means if you transfer the asset between one spouse to another, no capital gain tax is attracted on it. So here the client decided to gift an asset to the spouse in order to reduce the CGT liability. I know what you must be thinking, ma'am, you've already kind of solved this question. I know. So, but then give me your inputs. Which of these actions will amount to tax evasion? Give your answers. Maximum 2 minutes. Type it in the chat box. Which according to you will be evading tax, not planning tax? So I'm having quick answers. Very good. Very good. Yes. So far you all are correct. Very good. Wonderful. 100% correct answers. Yes, action 1 is tax evasion and action 2 is tax avoidance. Why? Because here the intention is to hide the invoice and transfer it to the next tax year so that the tax takes place in the next tax year. But we know the rule, the basic rule of accounting is that income should be taxed in the tax year in which it arises. And this invoice, this income, this revenue is arising in current tax year. So ideally it should be put to tax in the current tax year. Very good. So it's only action 1. Let's submit it and it's correct. Very good. Let's go to the next one. So now, what do you think are true about the inheritance tax? Which two of the statements are correct? It is an indirect tax? No. We know that it's a direct tax. So this is wrong. It is a progressive tax? Yes. Because like any other tax that we discussed in the beginning, that these direct taxes are always progressive tax. That is, as we have more income, you'll have more taxes. So it's a progressive step, like you are climbing the steps. It's an environmental tax? No, it's relating to wealth. So it's wrong. So even if you don't know, you know A and C are wrong. So by default, B and D are answer. But let's see the fourth option also. It is a redistributive tax. Yes, redistributive means you have wealth, you're redistributing it. Right? After you have, see, wealth is there, somebody else is inheriting it. So it is getting redistributed to somebody else. And the tax is also getting transferred accordingly because it is paid by somebody else. So it's a redistributive tax. Perfect. Answer B and D. Correct. Good. Okay, let's look at the next one. So I'm doing it from the question bank. Yeah, this is an interesting question. Fair company wishes to appeal against the assessment of 10 million of corporation tax. That's quite a huge amount by HMRC. By whom is fair company's appeal most likely to be heard? Now you can see the quantum of tax is pretty high. So we know that statutory review is not needed. Lower level tribunal or first year tribunal, as we can say it, it's a starting level. First year tribunal can be skipped because the quantum of tax is very high. So the options are first year tribunal, skipped. Upper tribunal is the upper tribunal, right? So that is can be the answer. Supreme Court, no, because you cannot go directly to Supreme Court. By the Court of Appeal, no, there is no Court of Appeal. There is only tribunals or the courts, no Court of Appeal. Right? So my answer should be upper tribunal. Let's check. It is correct. Good. Okay, so we have done the questions that we have in the book and the question bank. I'm sure with this, these topics are absolutely clear. Let me see if there is one more question I can find. Let's have one more question, and wherein I think the tax avoidance, evasion, that point can be cleared off, the steps that we did. Okay, so let's look at this question. You work for a firm of accountants. A few weeks ago, you prepared a tax return for Serena. Please listen to this question carefully. And again, you will get 2 minutes to answer this. Serena has now told you that she forgot to include some bank interest in the return, but that she does not intend to tell HMRC of the same. Intention is not there. That means it is tax evasion. Very good. Which of the following actions do you not need to take? Not. Okay. Number 1. Inform Serena in writing that it is not possible for your firm to act for her. Inform HMRC that your firm is no longer acting for Serena. Inform HMRC about the details of Serena's omission. Fourth, report to your firm's money laundering reporting officer Serena's refusal to disclose the omission to HMRC and the facts surrounding it. Which of the actions are you not going to take? Give me your answer in 2 minutes, all of you. Think, think, think. A, B, C, D. Which is the correct answer? Remember the steps. Step 1, 2, 3, 4, the sequence that we studied. Which of these steps is not going to be there in that sequence? Answer that. You guys are too quick to answer. No. One answer is wrong here. Rest all are correct. Wonderful. Wonderful. So, what is the correct answer? Absolutely. Answer C. Why? Like I told you, we will inform HMRC about the cessation of the duties. That means B is correct. We will inform HMRC about no longer acting for Serena. A is also correct, that you would inform Serena in writing that you are not going to work for Serena because she is not intending to disclose this information to HMRC. Fourth is also correct, that we will submit a report to money laundering officer of the firm. But third is not correct, because we can never inform HMRC about Serena's omission. We are bound by the principle of confidentiality. Okay, so absolutely correct. C is the correct answer. Great. I am sure with this your chapter 1 is absolutely 100% crystal clear, and in the next lecture we will study chapter 2. Till that time, please revise your chapters, revise your portions that we have covered, read through your book, and in case of any questions and queries, list down them and we will discuss in the next class. See you guys for the next lecture.